Hello, everyone. Thank you for joining us today on the second episode of our webinar. Today, we're going to talk about the key steps to have a successful client onboarding. And to have that conversation, I'm here with Dean Morris. Dean, how are you?
Good, thank you. How are you?
I'm good. I'm good. Thanks for joining us. We wanted to have this conversation because we are in the journey of learning about the payments world and the payments ecosystem. We understand that this is quite a complex and multi-layered world. So one of the steps that I found that all the banks have to do is client onboarding. And when I talk to you and other professionals from the industry, I realized that client onboarding is quite a step for every bank. And there are a lot of risk-related factors around it. So Dean, do you want to introduce yourself so we can understand why I've chosen you or I invited you to talk about this topic?
Yeah. So I've worked in the industry for a few years now, in various different roles, mostly within the onboarding space. Having seen how things work at the ground level, and now working in a more senior role where I, write the processes and have the regulations in mind constantly. I've seen a few different ways that the banks can be doing things and are doing things, and the way the industry will keep looking forward when it comes to onboarding clients successfully, really.
Cool. And, if we had to define the onboarding process, what is it exactly?
Yeah, so I mean, it's the start of every business relationship you're going to have with any of your customers, right? To bring them on as customers, you have to onboard them. In the industry, it's known as know your customer or know your business for some banks. This means that it's a chance for us to begin assessing their needs, right? Ultimately, we've got a responsibility to ensure that the product that we're offering is the right product for them. If they're eligible, right, whether their credit checks work out, or if there's other kind of implications, whether they're eligible for certain products. And of course, as you mentioned, the risk profile that a customer brings, right? And that's where the sort of biggest data gathering aspect begins, because you do have to go along and assess what a customer poses in terms of risk and what we can do about that.
And you mentioned know your customer. Is onboarding happening both for individuals and businesses that want to open a bank account? Do they have the same process?
Yeah. So in terms of the same process, it's slightly different. Obviously, when it comes to customers, you've got personal implications. You've got the lending or they might have their credit checks. So that data gathering for the KYC element is really important. And then the KYB, the know your business, we end up having to assess the business itself. Often you look at the financials of the business, you look at the risk profile it's in, the industry. Lots of different factors go into the business onboarding, and they're just a separate amount of things that go into them rather than a personal business or personal journey through onboarding.
And what is the type of data or key factors that you need to know, for example, about a business when you onboard them? What do you need to check?
Yeah, so I think one of the biggest things, right, is the industry they're in. Obviously, every industry poses different risks. Certain ones are more prevalent to cash usage, for example, that could bring more money laundering concerns. Certain industries have historical links to organized crime, so those have to be assessed. So when it comes to the information we're looking for, what they're doing, where they're getting their money from, often is a key part of that business onboarding and assessing whether we're the right bank for them.
Mm-hmm. Do you have any type of check to ensure that there's no fraud happening or anything like that? Can you talk a little bit about it?
Yeah, so this is often the difficult part for banks, right? So they have to assess based on the information that they can gather. So they will look at past banking for a business. Slightly trickier if you're a new startup, right? But yeah, certainly, longer lasting or longer existing companies will have some sort of record, and bank statements are a great way to provide that. And then you'll do a bit of transaction analysis to essentially determine if you can see any concerns or any potential problems within those statements, and see if we've got fraud concerns like you mentioned.
That's interesting. Is an onboarding manager managing existing clients as well, or once you're done with the process, you forget about them?
So it really depends on the banks, right? So some banks will separate onboarding completely from more in-life customer centered sort of departments. I think the reality is that anyone in the onboarding space should be comfortable when it comes to dealing with in-life customers to a degree. In terms of the processes that might be required when you're looking at the fraud prevention, that's a key part of anyone that works in a bank, no matter where you work.
Right.
So yeah, I mean, they are different work streams. They're definitely different skill sets as well. But a lot of banks are working to make sure that you can understand both aspects of a customer's journey, because it should never be a case of it's someone else's department, it's not my problem kind of attitude, right, when it comes to fraud prevention, certainly.
Yeah, ideally it will be that way, of course. I was just thinking, what is a common reason you would say no to a customer, or does that depend on the bank, or how does it work?
Well, as anything, terms and conditions are always a really common one, right? Who reads them? A lot of banking customers won't read those, so that's just one that has to be screened to make sure that you're sticking to your regulations. But really, when it comes to like an internal decision, it comes down to every bank will have an appetite and a certain risk acceptance. So they'll be willing to accept certain businesses, and others may not. And it just depends on what the bank's profile for that is, really. So yeah, it wildly varies within the industry.
So there are businesses with a higher risk and there are businesses with a lower risk. As, for example, you mentioned how likely they are to have cash management, for example. Is it fair to say that some banks would say, if you're using cash, I'm not interested, and then some other banks will be okay with it? Is that a fair assumption?
Yeah, so I mean, every business has a certain amount of risk factors. No matter how low risk a business is, everything they do is a factor. And if those factors combine to make a higher risk case, it may be a case where the bank decides that they're not within appetite. It may be one single large factor. You mentioned cash there is always a go-to example within the industry, as it's known historically, at least, that cash obviously has a link to money laundering. Certain banks will be more willing to accept a higher rate of that. Sometimes it's practicality as well, not even a risk aspect, really. If you just look at the fact that some of the new challenger banks within the UK, certainly they don't have branches, right? So they will use third parties to deal with the cash input that their customers might want to deposit, rather than a branch in your high street. So it may be a case of, again, I mentioned earlier, whether it's the customer's needs that need to come first as well. We've certainly seen over the last few years consumer duty being a really, really big thing within the industry.
I assume that you've seen businesses trying to open a bank account and not being successful, and I assume there's a lot of fraud happening as well. Can you talk about the fraud aspect of it? Like, what are the most common fraud attempts, or what's going on in that world?
Yeah, I think when it comes to the most common frauds, honestly, it changes on a regular basis. It's this constant cat and mouse game that every industry goes through when it comes to people trying to evade requirements, whether it be through false documentation, misrepresentation, just straight up lying to us is always an option. And it's our job to keep on top of those risks. When it comes to how we detect those, obviously that is throughout the onboarding process. Is one of our core tenets of to keep an eye on when we're looking at the documents, for example, to ensure that we're checking certain markers or certain indicators. You might look at ID documentation, and as I'm sure you're familiar, things like passports all have key identifiers that you can use to prove that they're real. And every bank will have some degree of screening for that to ensure that we're not getting false documentation, that sort of thing.
It's funny you mention it. I just opened a bank account, and they were asking me to take a picture of my passport, and I had a picture of my passport on my computer. So I was trying to take a picture from my screen, and they will not accept that at all, which I understand. Like, you need to have the physical passport, of course. I was just too lazy to go to the living room and get it. So I was trying to do it that way.
Yeah, it's bold. They might want to do that. When it comes to, obviously, yeah, you've got proof that you've got access to the real document to make sure you haven't just received a picture of someone's passport. But it's also, EU passports are world famous for it, as well as the UK's borrowing a lot of the same technology for fraud prevention. They've got so many different devices that when I came in the industry, I learned so much about the unique identifiers in each passport, even down to how the passport number and things like that are generated. It's eye-opening, actually, to see the amount of defences you've just put in place for that.
Yeah, I remember with the UK Home Office, at one point I had to scan my passport with my phone, but it consisted of just placing my phone on top of the passport. And then the process was done. And I was like, what is happening? Like, what's going on? That if you put your phone next to your passport, you got verified without any picture whatsoever. I was really surprised that that kind of technology existed.
Yeah, it's I mean that's the forefront of the banking industry as well as the data industry, right? The new technology that's coming forward. We're hoping it's making fraudsters' lives as difficult as possible, right? That's the aim.
Yeah, and in that regard, I assume there's a lot of technology providers outside. What are the things that banks can use? What's the comparison between the internal capacity or capability of a bank and what they can get from outside?
Yeah, so every bank's going to be different, but regardless of the size of bank you may be dealing with, some of the bigger historical ones or the newer sort of neo-banks, they're always going to be scanning for new partners, new startups that are looking to challenge the industry on how they're doing things. In fact, it's one of the things that the Financial Conduct Authority recommends is for third parties to be utilised properly and securely to ensure that we aren't settling into bad habits, that we're keeping ahead, hopefully, of the fraudsters and people trying to breach the system. So, I mean, lots of services can be used like with third parties when it comes to payment processing, account information, lots of business functions, as I'm sure you're aware, even down to like personnel management. Quite often that's a third party system. It could be other fintech companies, telecommunications, or data vendors like yourselves, right? Any bank can utilize outside sources to learn a lot about the situation. You asked there what might be the most common types of fraud, right? That might be something we utilize a third party for, to have a look at global systems to see where the data comes in when it comes to the crime statistics, and then they might make recommendations to us to shore up our systems. A lot of banks will use third-party auditors to come in, as well as the regulator, to test us in a lot of ways, right? To learn from that, which is a really great way. Specifically within the onboarding space, a great example is screening. So that's us checking against international lists to make sure that no one's on any kind of watch lists or sanctions. And the FCA recommends even that if we do use our own list, how do we know that's the most up-to-date list? And then it asks, if you're going to be using third-party vendors for that, are we doing our jobs to ensure that third party is keeping their list up to date? So, third party or external capabilities are core to ensure that we're keeping ahead of the game as much as possible. So definitely when it comes to startups as well, and the new emerging market for these, the new banks within the UK is the whole concept of challenging the industry, and I think that's where the sort of startups can step in a really great way.
Now that we're talking about startups, I was just thinking, with the rise of AI, everything's changing. So how does it going to change onboarding? I guess AI can help, fraudsters, but it also can help you prevent them. So what's your take on that?
Yeah, I mean, when it comes to the AI sort of revolution, as it were, I think every company, no matter the industry, is going to have to keep on top of that and absorb that in some way. Within onboarding, you've got the business aspect, which means for the bank's business, that is just an efficiency point of view. If you can automate some of the more common processes, a bank may receive thousands or tens of thousands of applications a day on the larger banks, right? Manually doing every single step, while it might be not necessary, and you can get an automated system to do so, just from an efficiency standpoint, is a great option. But it also acts as that additional layer of defense. And one of the things that the FCA recommends quite a lot of the time is to work on a multi-layered model. So you might have an AI or some sort of automated function, screening documents, screening applications, looking for common patterns. Perhaps a customer has applied for a few different products, and it might be able to compare those applications, see if there's any concerns or flags. And it just acts as that extra level of, okay, well, maybe there's something wrong going on here that human eyes might not be able to spot, or could spot, but in 5 times the time, right? So I think when it comes to the AI stuff, I don't think it's ever going to truly replace that human interaction you get from a holistic view of a customer's risk profile, but it definitely will, pair up and act as another layer for us and an aid.
Absolutely, I completely agree. I think there are some processes that will hardly be replaced, but you could do the same job 5 times in one day. I think it's just, in some roles it's a multiplier. In some other roles, for sure, there's going to be replacement. But we will see what happens. I was going to ask you, and just to finish, this is a question that I want to ask everyone who participates in the webinar, which is, what are the benefits that you see in data enrichment?
Yeah, so again, from a bank's business point of view, it ensures we're doing the right thing. When we can look at all the data, if we've got these new projects going on, it sounds great, but if we can't show it's working, then what's the point, right? And then the later impacts going on to the customers, if we can ensure we're giving better service to them and protecting the wider financial market, then that's a win on both fronts. Not only are we making reviews quicker, we're making them more accurate, we're ensuring that the regulator is abreast of everything that's happening within the bank, because we can give them the correct data, and then it goes forward from there. Really, it looks at moving forward to the AI age. Assuming we can get models that will start working with us to help automate those processes, you need to use data to help train those and correctly inform those. So from start to finish, when it comes to the onboarding process, certainly data is a core part of everything we do. So if you get better data, you get better results.
That's a very good way to summarize everything we're trying to do. We always talk about the idea of data enrichment as improving your input. So, all banks and insurance companies as well use lots of data, and they have internal models, and they do have large data analytics team and so on. And we always say that if the input data you have doesn't have enough quality, then the output data will not have quality either. And that's why enrichment can be a key factor, because what we're saying is that, yes, banks have a lot of data, but is that data good? Or does that data have enough quality? External data can verify whether the data is good or not, or correct it when it's wrong. Or at least that's how we're saying it. So, well, Dean, is there anything you want to add, or should we wrap up?
No, I think that's everything. It's just it's an exciting time, honestly, within the banking industry, with everything the regulators pushing forward when it comes to consumer duty, but as well as the changing market, like you mentioned, with the AI aspects to it, right? I think banking is definitely changing for the better, and I look forward to seeing what data comes from that.
Me too. I'm sure that if we have this conversation in 2 months' time, it will be completely different. So we'll do it next time then. Well, thanks very much, Dean, and thanks very much to all our audience. I hope you find it interesting, and we'll see you next time, next month. Thank you.